Breaking economic news, the Institute for Supply Management, ISM to you, is out with its Purchasing Manager Index for the USA, and it is weaker. Growing not as fast anyway. 51.1 in August, down from 52.7 in July. We don't know about you, but we are tiring of these anecdotal surveys of business conditions. These are opinion polls on the economy as opposed to real data like car sales, which are coming out as we speak, with Ford saying car and light truck sales are going to be 17 million at an annual rate in August, the fourth consecutive month of strong, completely normal sales. If the Fed was watching business conditions indicators like car sales, instead of the elevated numbers of people saying they are working part-time but want full-time work and cannot get full-time employment because of weak labor market conditions, if the Fed watched car sales, they would have lifted off months ago. After all, the economy must be pretty normal now, years after the recession ended, and the Fed funds rate is supposed to be normal too. We digress, though, and are down a little on the Purchasing Manager Index data, PMI, as it sank the value of our stock portfolio overnight. Another PMI report from China for manufacturing, the government's own index, falling to 49.7 in August from 50.0 in July. Actually, it looks like stock futures were sold last night at 8 p.m., technical charts-based selling perhaps, an hour before the China PMI data were released. Regardless, investors think China is weakening as a PMI below 50 signals contraction. Real GDP in China, if not the government target of 7.0%, is certainly not much lower than 6.0% right now, which does not sound like a contraction in the economy. 6% growth out there. But people worry over China anyway. Back to ISM manufacturing, down at 51.1 in the USA, still signaling a growing manufacturing sector. We hope so. Industrial production and durable goods orders are up. Even if it is lower at 51.1, it's still growing. Something to do with a strong dollar, the index's fabricators inform us in the press release. Time will tell if this activity weakens further. Net, the ISM manufacturing PMI fell 1.6 percentage points to 51.1 in August. We would discount this number as a meaningful statistic of current economic conditions. The anecdotal survey has some worth, however. We like to see who is up and who is down, and just like the FOMC members, manufacturing industries are split, with 10 of 18 industries growing and 6 are going down. Those industries reporting contraction are apparel and leather, primary metals, electrical equipment and appliances, petroleum and coal products, computer and electronic products, and transportation equipment. Again, keep it in perspective here. Real GDP grew a fast 3.7% in the second quarter, and it looks like consumers are buying everything out there on the car lots in August. 17 million annual rate. We suspect the economy out there is better than the purchasing managers think. Bet on it.